Good morning, everybody. This is Pauline Chung with the San Mateo Area Chamber of Commerce. I'm your Director of Communications and Marketing, and I wanted to welcome you to Business Essentials this morning. And our guest speaker is Khloe Cansler. She's with Cansler Insurance Agency, and she's been a Farmers Insurance Agency owner on the Peninsula for many years. She has both an MBA and Bachelor's degree in Business Finance Economics from Notre and Namur University in Belmont. And during her graduate studies, she tried finding a way to be a business owner in the recession, in a recession-proof industry, and found opportunities for farmers insurance. So I'm going to hand it over to Khloe. We are recording this session, and we have some time for Q&A after her talk, and then I'll go over some chamber announcements at the very end. Feel free to put your questions in the chat, and please stay muted during Kelly's presentation. Thank you so much.
Great. Thank you, Pauline. I really appreciate it. I'm going to get my screen share up. All right. So the market update on fire insurance in California. Obviously, this is, a hot topic. In complete honesty, we've been enduring fires really tragically for the last 3 years, and wanted to share what's been going on and how it relates to insurance and how it relates to being better protected as a consumer. So first, I wanted to share the statistics. I looked up what were the most destructive fires, the top 20 destructive fires, to see really what it's been taking a toll to families, to housing, to businesses. And in total, there's about over 36,000 structures that have been lost in the wildfires in the last 3 years only. You can see that the Camp Fire was obviously the most destructive in Butte County and Paradise in particular, with 18,000 structures. It pretty much decimated an entire town completely to the ground. And then up to obviously the more recent ones that had happened. And we haven't even, this was from just a few weeks ago, but we still have even had further damage with the glass fire that has been happening. So to see what this has done to California has a direct relation to what it's done to the insurance industry. So I wanted to definitely point this out. This is pretty much my favorite meme for 2020. It's like the fires are just happening all around us, but everything's fine, everything's fine. It's really not. And what we need to be doing is understanding this impact on everybody in the area. So I'm going to go over a few things. One being like actually understanding what some of those 36,000 structure destruction, fires, and damages have actually cost to real insurance companies with real dollars, and what they've paid, but also what the insured, what the customer is actually getting to rebuild themselves and their lives and their properties. And then how are homes evaluated for fire risk? So we're seeing obviously a shift with a lot of insurance carriers, what's in terms of who's insuring where, who's non-renewing policies, canceling policies, and also not making new homes eligible. We do see a lot of this here on the Peninsula. Hillsborough, Burlingame, Woodside, Belmont even are now considered in higher fire zones. To understand what they mean by homes with an elevated fire risk, that is something called protection class and fire line. Protection class has to do with how the fire stations can get out to, and which fire stations can get out to each property to get that mitigated. But then also this thing called fire line accounts for, how much brush is around a house. Is it on a hillside? How many streets and ways can the fire department get to a particular house? So that's where people may see that their homes may be considered at a higher fire risk than a house in the middle of, San Mateo, close to El Camino Real, versus maybe up in the hills, up on Paul Hemus or something like that. And then what options do homeowners have? Realistically, there are all the major insurance carriers have reevaluated what they're looking at for risk, if they're willing to take it or not. So in every case, there's going to be some option. It's just going to be, what is that option going to cost a consumer? Are they going to have to spend $10,000 a year for homeowners insurance when they used to maybe pay $1,000 or $1,500 a year based on where the house is located? That's something that people need to pay attention to when they're looking at relocating or buying and selling homes. So when that does come to the real estate market, a lot of people have left the Bay Area, but then they're going into areas where they are now looking at these high prices. El Dorado County, Placer County, they're moving out of the Bay and they're moving up towards those areas. And now it's having people reevaluate if that's really a good financial decision. They may be able to buy a house for, under $1 million, but maybe now their homeowners insurance is going to be $10,000 or $20,000 a year. We've even seen that in Oakland. Oakland Hills is somewhere that has been heavily impacted by the revisiting of the fire insurance risk mitigation. Piedmont also another area. But does it mean that someone is still willing to move and pay those higher premiums just so that they can have a lower cost for their mortgage? So it's something for people to really weigh out. So here is a real example of one of my clients that lost their home in Napa at the Atlas fire in October of 2017. We're coming on that anniversary here, like right now, actually. Farmers paid over $2.5 million to this insured for all of the collective costs that were associated with what they needed to rebuild and relocate and replace. Their reconstruction cost on their home was over $1.2 million for their home, separate structures, pool, fencing, decks, their personal property. I mean, their home was full of stuff. And this is something that I'm going to touch on a little bit later, but when you're looking at what you need to rebuy inside your entire home, down to the salt and pepper shakers and the furniture and the TVs and all your clothing and personal belongings, you really start to see how it adds up. And mostly because you have to buy everything brand new. It's not something that you've accumulated over time. You go back to someone's wardrobe and you're like, oh, well, I've had all of these different suits and pants and dresses and shoes and things for several years. Well, if you have to go buy everything all over again, you're gonna have to spend a lot of money to do that. So again, these clients had almost over $740,000 of personal property that farmers paid them to go buy all their stuff all over again. And this is also a very important one to look at, the loss of use coverage. They had over $247,000 paid towards their living expenses while they were displaced. So when their house burned down, they were actually on vacation. They didn't even have the opportunity to go and get any of their stuff out of their home upon evacuation. They were on a flight to Hungary and Budapest, and they got a call from the neighbor that the house was gone. Imagine getting that phone call and not having the opportunity to get anything that they had with them. And they had questioned even to return early from their trip. But the husband was like, for what reason? We have no house to go to. Let's just stay on vacation and enjoy what we can while we're here. So at least they had their luggage and so forth. But when they got back, they still had a mortgage on that house. And so they were still responsible to pay the mortgage on that house for every single month that they could not live there. So they were able to find a furnished rental for $9,500 a month. And they actually had extended beyond the initial 24-month time frame that living expense coverage was covered for. Farmers was one of few carriers that decided to do a continuance on the living expenses past the 24-month period. There are many other carriers, unfortunately, that shut off that payment And then those insureds were responsible to continue to still pay their rent at their accommodations, and then their mortgage that they were still having to pay. It was a very, very sad circumstance. And the only reason why our clients were not back in that house in 24 months was due to like an encroachment issue with a neighbor and some permit stuff, but their house was already done and ready to be moved back into within that 24-month period, but we still did pay that. And then there's obviously several other things that are just smaller items, but important items. We even sent them a check for $500 because their cat had passed away. It was not able to be found. And that was a really honorable thing for farmers to do with regards to those clients. But in addition to the home that paid over $2.5 million, they even had one of their vehicles in their garage that we paid $45,000 in for a comprehensive claim against that policy. So when we're talking about 36,000 plus homes that have been lost, we're talking about those could be of upwards, obviously, of $1 million, $2 million, et cetera, in damages for each one of those claims. So you can see how it's been a very large impact to the insurance industry and why they've had to reevaluate the risks. This was also an example of my client that had lost their home in Paradise. So that was June of 2018. So the reason why I show this snapshot of the letter that was sent to the clients was to understand, since these fires have happened, 2017 was when the first wave of them really started hitting us in large catastrophe numbers. Obviously, there's been lots of fires in the past, but once those happened in 2017, the insurance companies are finding ways to streamline the process with the claims so our insureds could get money fast. This situation just shows that they actually used like drone footage and aerial footage to confirm houses that were total losses. And they were able to do that very fast. So this says that the loss date was the 8th of November. Conversation that occurred on November 11th, and a payment issued to them for a direct deposit of $163,800 for personal property to go and buy right away within 4 days of the loss. The insured called me and said, is this a scam? Are they really going to deposit $163,000 into my account? I said, absolutely. It is not a scam. They are doing this. You are getting your money right away so that you can start rebuilding your personal items that obviously were lost and gone. So in this particular claim, we've paid out a total of $845,000. And this client has not rebuilt. They actually bought another house, but they were still entitled to their funds. They still own the land. So if they do choose to rebuild, they can. But again, these are things that people don't really understand, the true dollar amounts that happen when these claims are paid, and especially paid in a timely fashion. They also, on top of this $845,000, they had lost motorcycles, an RV, and a boat that was totaled also at $26,000. So this one client had a total of 4 claims because the 3 different personal recreational items plus the house. And they were as well paid for their living expenses, and that has been maxed out as well. So the client's due diligence. I know this seems counterintuitive, but in policy documents, it does lay out that it is the insured's responsibility to notify the insurance company of any updates and changes, and also to make sure that their coverage is adequate. So that's why it's super important to work with a person, to work with an advisor, to evaluate the coverage, to evaluate if things are correct. And some of these due diligence items is to make sure that the property address and the names are correct. They must match title and loan records. If they do not match title and loan records, it can actually be looked at as misrepresentation. So it's very important that those things match up. Making sure your property square footage is correct, living square footage and additions. People do add-ons to their homes, and update their homes and renovate their homes, but they don't notify the insurance companies. So then how can the insurance policy properly reflect what that home looks like at current status, so that if there was a fire and a total loss, we have the right amount of coverage to rebuild the house to what it was currently. I like to say, go through, and that next one, take photos of your home. Have you remodeled and updated? Send those to your insurance agent and make sure that they have them on records with the rest of your policy information. So if there is a loss, you actually know what the before was. Because if the after is a pile of ash, there is no way for you to be able to recount in your head and then go through and ask family members for photos of birthday parties and holiday events, so that they can help kind of piece the puzzle pieces of what their home was prior to loss together. So that is really very important. And then the cost of rebuilding ranges, but here in the Bay Area, it's between $300 and $500 a square foot. For most people, we want to get everybody at least in that $400 square foot range. But obviously, San Francisco has higher cost per square footage. We definitely see that with looking at appraisals and everything. And then obviously there's areas outside the Bay Area that are lower. So it's always good to always check with, more localized contractors and see what the cost per square foot is to rebuild in that particular area. And obviously reviewing your coverage options and additions with your professional annually. There is no accountability to an 800 number. So if you call an 800 number, and we'll just use Geico because they're a 1-800 number kind of business. If you call them and say, these are the things that I want for my homeowners, they're just going to say, okay, and you'll be done. The issue of policy, you'll be done. If you need to talk to somebody, you've got a different 800 number operator that's going to field your call every single time. There's no accountability to Bob or Mary or Joe or John that answered the phone the last 5 times. And neither is Bob or Joe or Mary or John ever going to be someone that asks you to review your policy, or maybe even come out to your home for a property inspection. So it's good to have somebody that you can have a conversation with, because this is not only important with just underwriting a homeowner's policy, but it's the service, and then obviously it's the claim. It's having somebody directly that you can call or text or shoot an email to with questions. I've got clients that were evacuated in Santa Rosa with the glass fire recently, and it was so reassuring for them that they could call and text me, and I had reached out to them to say, I believe based on your location that you've been evacuated, and confirm with them that they had updated their coverages, that they had done their home inventory, and that they were prepared if something did actually happen to their home, and they felt very comfortable with that. And then this part is really important as well. Evacuation. So a lot of people, like we've said, have had little to no notice for evacuation and can only grab what they can grab and get out the door. This is a evacuation list. This is what you should be gathering within a time frame, whether if you have a 15-minute warning, a 30-minute warning, a 1-hour warning, or a 2-hour warning of all the things that you need to take with you in a moment's notice. So these are things that you should have far in advance. Personally, I have some shelving next to our garage door that goes out from the house into the garage, and I have all my stuff in that shelving. Everything is ready to go, with especially all the mostly important stuff. But if in the event that we need to go, I've got a go-to place that I can gather up that stuff and get out of the house. So that's obviously one element. And then the home inventory, I've kind of mentioned this before. Going through your home and taking photographs of everything you have. It seems like a hefty task, but with people being home and with shelter in place, you have more time in your physical house. So it makes it worthwhile to you to go through each room, take photographs. Like for example, my home office, photographs of all my computer equipment, all of my just miscellaneous, all the furniture, all the things on the walls, all the stuff that I have. And what I think is a very good value is taking photos, not only of the stuff, but serial numbers on electronic equipment or important things that have identifiable marks. And then going through that throughout the home. Then if there are higher value items, make sure you do have appraisals on them. Art, jewelry, collectibles, that's very important to have, because if you don't know exactly how much something is worth, if you had to go buy it again, replace that ring, replace those earrings, replace that piece of artwork that you bought 25 years ago, or maybe you've got a baseball card collection, or some really antique high-end furniture. All of these things would have a monetary value to be replaced or for you to be compensated. It's best to know beforehand what exactly it is that you would need to be replacing. So make sure that you go and get that done. And then store and scan copies of your important photos and documents and put them in a cloud file so that they can be reproduced and or accessible in the event everything is completely gone. And then the last one, have emergency evacuation kits packed, and that goes back to this overall list. So that pretty much wraps everything up for what I had on the topic today. So if you have any questions, and we have, I think Pauline would let us know if there's just a couple minutes left for questions.
Yeah, there are currently no questions in the chat, but feel free to unmute and ask Kelly any questions you may have.
I've got a question. So on the house in Napa, where it was paid out 2.5 million, whatever, and change, what kind of policy was that? I mean, in terms of how much did that cost a year? And is there an example of something like that? I know there was for the other $854,000 house. So was it just, did they have additional riders on that, or it's just the dollar amounts were greater?
Their overall policy was bigger because the house was a lot bigger than the house in Paradise. So I would say that the house in Paradise was probably about a third of the size of the house in Napa. The house in Napa, they paid an annual premium of around $4,000 a year, but they had a lot of extra riders on that policy for jewelry and things like that. So, so their cost was obviously more in premium than the Paradise house.
Okay.
It was just a lot more coverage.
Right. Okay, thank you.
You're welcome.
Any other questions for Kelly? I have a question, Kelly. Will these slides be available?
Absolutely, yeah.
Okay, great.
A quick question, Kelly. Is there areas that you would definitely recommend this kind of insurance, or other areas that maybe are less risky or less recommended? Or should you always, if you have a home, would you always recommend this?
So every homeowner's policy required by a lender is going to require quote unquote hazard insurance. Hazard insurance covers for fire, vandalism, theft, water damage, etc. It's in the areas that are of high risk where you actually end up in certain circumstances having to buy two policies, one specifically for fire, and that's with the California Fair Plan, and then the other portion of it, what we call a difference in conditions, covers for the water damage, vandalism, theft, wind, hail, rain related damage. But every single one is going to have fire insurance. It's part of the package. It's part of a homeowner's insurance policy.
Okay, so it's just a question if you're getting supplemental insurance because you want more than what's standardly.
No, not more. It's just in certain areas, like I've been kind of mentioning, like El Dorado County and Placer County and so forth. Oh, or even here on the peninsula, there are areas. some preferred market carriers, like Farmers, may not want to insure for fire where it is of higher risk. And that's when they'll say, okay, we're going to decline the fire insurance portion. We'll write a homeowner's policy for liability and water damage and all those other ones. But the fire insurance section is going to have to be covered by the California FAIR Plan. So it's where some of the carriers, and pretty much all of them at this point, will either decline the offer to do a policy, or they will say the condition is fire coverage has to be placed with the state, and the rest of your coverage can be placed with, for example, Farmers under that specific type of plan.
Got it. Okay.
Yeah.
Good to know.
It just makes it more expensive for the consumer because now you're paying for two different policies.
Right.
So, like, for example, like, well, it's also a claim going on, but a client in Boulder Creek had bought another property and they had to have two separate policies, one for the fire with the state, which was about $4,000. And then the other farmer's policy that covered the liability and water damage and everything else, which was another $1,600. So versus, you know, my family's house in Boulder Creek that still has a single policy because it's been on the books for so long, which is only $1,500 for the year, covering fire and water and everything else. So where you can
so they were grandfathered in pretty much.
Mm-hmm.
Whereas now, okay.
Right. Yeah. If you're grandfathered in, keep it.
Yes.
And I wouldn't recommend changing it. But yeah, that's where we see a lot of people are in that situation where they're like, oh, well, I'd like to shop my insurance. However, it may not be smart for them to change carriers if they've got a good policy that allows for an all-inclusive fire and everything else.